Hello there. Welcome. We are back again. And this week has been yet another dramatic week. I think it will be fair to say. And this week we are going to talk about only two things, but they are quite dramatic. So don't worry, this won't be boring. So the two things are, firstly, is the Autumn Statement, which Jeremy Hunt announced at the end of the week. And the other thing is we are going to talk about the downfall of FTX and whether or not Jonah Hill is going to get the movie part of Sam Bankman-Fried in the movie that is definitely going to be made about this scandal. Anyway, right. So let's start off with the Autumn Statement. I mean, I think my overall opinion would be that it's been well trailed. You know, I think that the government did a good job of managing down expectations. I mean, this is like a classic management technique, is that they manage down expectations and then they come in and, you know, it's not so much of a shock. A bit of a contrast to, Truss and Kwarteng's surprise, which didn't really do very much for everyone's health generally, and the markets hated it. When I was speaking with Ralph earlier on, I likened it to, let's say, Truss and Kwarteng hiding in a cupboard and then immediately jumping out naked and saying "ha ha," versus Hunt and Sunak coming out fully suited and going, oh well, hello there, how lovely to meet you, but that sort of thing. So I do think that the other thing, other major things I guess to mention with it is that it seemed that obviously this time they used the projections from the Office for Budget Responsibility, which is not what happened with Kwarteng and Truss. In fact, I seem to remember now, it wasn't that long ago, but that they weren't going to do it, and then they were potentially going to possibly run it by the OBR like a few weeks later. But obviously they fell by the wayside. Whereas this time, Sunak and Hunt have taken into account those projections from the Office of Budget Responsibility, and it's been a much more, it was received well by the market in the sense that markets didn't really do much. I mean, when you say received well by a market, usually things go up because maybe there's uncertainty, and then you get the announcement, and then that's okay, it's out of the way, and then things go up. I would say it's not that kind of great reception, but it didn't go down, it didn't drop like a stone. So I would say that's a win for the government. So anyway, overall, I think that everyone was fearing the worst. But what did you make of it, Ralph?
Yes.
I mean, I noticed you're wearing black, for instance, but that's not reflective of him.
No, there's blue. There's blue underneath.
Okay,
no,
right,
it's because we can't afford to switch the heating on. So
yeah, that's why I've got this on, mate. This is quite.
Does it work? Does it work for you? Is it thick?
Yes, it does.
This is like a fleece, is it?
It's not fleecy. I've not gone. We're not that extreme yet, but maybe give it another month or so. Maybe it will.
Another month. I sit here in a blanket and wrapped with a beanie on. Anyway, first thing which occurred to me is when you said we are going to talk about two things only. It's not going to be boring. Then you said we're going to talk about the budget.
I know.
I think you need to work on your delivery there a little bit.
Yeah, that's a good point. Yeah. I did think that as soon as I said it, but anyway, never mind.
Yes, okay, too late.
Yeah.
So anyway, yes, on the budget. The first point is, in fact, that the markets took it in their stride, and they did take it in their stride because of two reasons. The first one is that it wasn't an absolutely unmitigated, terribly Halloween-like, hellish disaster. And the second one was that it was
bad, you mean?
Sorry. Yes.
Okay. Yeah.
Too much. That it was properly trailed, and that it was properly pre-announced, so to speak, by the usual avenues of leaking things to the press. But there's nothing nefarious about this at all. I mean, this is in fact how it is normally done. What is normally done is that the OBR gets involved, the Bank of England takes soundings, or the government takes soundings from the BOE, so we all know where we are, and then some of it, the key elements of any budget, is always kind of leaked to the press. This is in an effort to sort of give out indications of what to expect to the markets, and then typically you have one or two surprises in the actual budget announcements, and it is these surprises which might send the markets higher or lower. This hasn't happened in this event, but this to me is, I think, only testimony to having a government in place again, which is working on the tried and tested avenues which have been established forever, which only Mrs. Truss and her Chancellor chose to ignore. So it is by reference to a complete debacle that this was a normal budget. So that's one of the reasons why the markets reacted in the way they did. But talking about the budget itself, I actually thought it was an equitable budget. Because we always have to, I mean, we always have to sort of separate out personal tax and corporate tax in these announcements. But if you just focus on personal tax for a moment, I didn't think this was unequitable at all. I mean, the rich got taxed more. By lowering the threshold for the upper tax bracket to 125,000. Yes, people in that bracket only have to pay 1,500 quid more, wouldn't actually hurt them. But in essence, that is, I think, what a society based on a progressive tax system should do. I mean, better off people pay more tax. And this is happening now. The lower taxable incomes were not taxed more, which is also nice to see. The one thing which I would have perhaps wanted to not see is that they were freezing the tax bands up to 2028, because that will mean that the lower income brackets will be pushed into higher taxable amounts in the future. But not this year. This year, where you have the inflation biting and energy costs rising, I think it was an equitable budget for pretty much everybody. So that's good. Second, the commercial sector, commercial rates. Just want to pick out two things. One is business rates, which is just basically the sort of tax which businesses have to pay for being businesses, for being located somewhere. These were largely frozen. They were certainly frozen for SMEs, small and medium enterprises like pubs, etc. And I think again that was positive, because it is that sort of sector in industry which needs a control of expenses most at the moment, and that is going to help almost those businesses which need it the most at the moment. And the second one, which I'd like to single out, is windfall taxes. Because we've discussed it before, and it was always touch and go. And the Boris Johnson, it was you sort of got the classic ideological conservative response: we don't do windfall taxes. On the Liz Truss, you got some really weird anti-growth coalition sort of type idiocy, which allegedly meant that windfall taxes are wrong. But now what you have is a government which I think is taxing those who are currently benefiting from the crisis. And that is correct, I believe. And second, it is also against classical conservative ideology. And this to me is an important point, because it looks to me as if, certainly for now, we have a conservative government which is looking to act, as far as I can tell, in the interest of of most people, in the interest of the country, and is not implementing policies which are just merely in line with classic conservative thinking. And so we have a government in place now, I think, which is largely, as far as the budget is concerned, sensible, as equitable as it can be, and not driven by conservative ideology. And I think these points are important, and these make me reasonably calm that we might be able to weather the coming storm as well as we can possibly be expected to.
Yeah, I know, it's very interesting, and I think that the fact that there wasn't too much of a reaction afterwards really would suggest that maybe they did strike the right note. At the end of the day, it was never going to be pretty. So I think that everyone got warned. I mean, one of the things that did come up in conversation this week in the wake of the Autumn Statement was this whole thing about maybe what about high net worth individuals, perhaps, or high net worth individuals still having, still being able to get state pensions when clearly some of these high net worth individuals really don't need that money, and you sort of think, why couldn't they give that? Couldn't they put that back in the pot? And obviously, to be able to do that would be quite difficult from an admin point of view. So my suggestion was to have a tick box, where you on your returns or something to say, I would like to exempt myself from state pension this month or whatever it may be, because then that's kind of an element of self-selection. Yes, there'll be a lot of people who go, no, I don't care, but I do think it might, it at least might generate something. And I think that because it's specific, it has a chance of working. I mean, I said to you earlier, Ralph, that I was actually out quite literally on the road this week, and I went to a petrol station, and because can't afford electric vehicle, right? Can't afford electric vehicle. I went to the petrol station, and the lady at the counter said, "Oh, do you want to give a pound or something?" I think it was £1, to children in need. And I said, yeah, okay. And I did that. And it's because I think if I hadn't been given the option of doing it, I wouldn't have done it. So it would be quite interesting to see, and I wouldn't have thought it'd be too difficult to do, if they did actually give people the option of, say, opting themselves out the state pension pot. I mean, it doesn't have to be forever and ever. Maybe it's like I don't know how often people will get this, if it was every month or every year or something like that. You could say, okay, actually, for this year, I will donate that. And I think that psychologically, it's easier to tick that box than it is if they were to ask you, or if they were to try to do something like, means test it or whatever. But again, what do you think of that?
Well, I think in general, these ideas are interesting. Mm-hmm. I think there are two aspects of this, I think. One is the general philosophical message that such an action sends, which means that we are a society who care for equitable funding and who have lower income classes in mind. So anybody who would choose such a checkbox to opt out of the state pension would send such a message, and I think that's positive in itself. Of course it is. But the second aspect of it is pragmatic. Does it actually do what it's supposed to do? Because in the end, the lower income classes need to benefit from it. If they do not benefit from it, there is no purpose to such a thing. So what needs to be done there would be to have the checkbox ticked, and then you opt out of your state pension. But what I would need to see to be clear and 100% working is that the funds which are being saved are going to be redistributed to those in need. So I don't want these funds to disappear in the public pot in general and fund Boris Johnson's next holiday. What I want to see...
Or party.
Well, see that I'm not smiling. I'm actually not really finding that very funny.
Okay.
What I would need to see then is actually a reallocation and an increase of the state pension allocation to those in need.
Mm-hmm.
And then you start wondering how would that be done? Because they're not just one person in need, there are lots of people. So some people might be on £10,000, they're clearly in need,
mm-hmm.
and some people might be on £15,000, they're also in need, but they're 50% less in need than those on 10,000. So how are they going to allocate this? So you see, once you get to this, you move from a general sort of philosophical idea towards an implementable, actionable policy. But however, that doesn't mean that this is a good thing to do. I mean, that can be managed.
Yeah.
All I'm saying is that if it is something which is aimed to increase the equitability of social services, then I will need to actually see that is the result of it, and that it doesn't just disappear in a big pot. But so yeah, in general, perhaps. And also the question is then something else which I keep saying. It has a huge public relations impact always to tax the rich or not to tax the rich or whatever. But oddly enough, contrary to public belief, there are not that many super wealthy people in the UK. If you tax them a little bit more, it doesn't actually generate that much more in tax benefit. So if these people sacrifice their whatever £20,000 state pension, well, you will need a lot of people to sacrifice it before you actually see a measurable improvement in for those in need. But anyway, so these are just bickerings of a petty mind, which is mine. I think you have a good idea there, and also is specifically being actively prompted to do something. I think that's an interesting thing. So if you just put a checkbox on people's tax returns and make this a possibility, then I think just in itself, will actually generate some funds.
Yeah. We'll see, won't we? We'll see.
Yeah.
Cool. Yeah. Right. Okay. So let's move on to the next thing, which is, it was an absolute shocker. I mean, FTX, what an absolute disaster that has been. So, I mean, just in case anyone watching or listening to this has been living in a cave with no internet access. Although, actually, to be fair, most caves don't have internet access, as far as I know.
Yeah, probably not.
But unless you've been living in a cave. So, FTX, world's second biggest cryptocurrency exchange, went bankrupt. Just before it went bankrupt, it tried to sell itself to the number one exchange, Binance. It didn't work. The guy at Binance did his due diligence for less than 24 hours, it seems, and said no, thank you. And as a result, the whole thing just went bankrupt. You've got a new person in who is very much, he's actually an expert on companies going bust, and he had a very interesting he said so he's looked at things like Enron. He said, never in my career have I seen such a complete failure of corporate controls and such a complete absence of trustworthy financial information as occurred here. Which is quite amazing because this guy's not young, right? And he's got a lot of experience. So, I think it's been an absolute disaster. It's been seen as almost like basically a Ponzi scheme, because he just didn't have the money, and there's all sorts of scandals. There's a there's a class action lawsuit pending. I mean, it really is an absolute disaster. Now, I kind of think, class action lawsuit, fine, but who's going to pay the money? Because there isn't any. So, yeah, I mean, what was your reaction to that then, Ralph?
Well, my first reaction was, oh dear, another one of those. Because let's not forget, this is not the first time we've seen something like this. I mean, you mentioned Enron. There was AIG. there was, of course, the financial crisis in earlier this this century, which basically were built on CDOs, complicated financial instruments where you didn't know where your credit risk was in the end. And then there were others, of course, and now there's Madoff, of course, the Madoff Ponzi scheme, which was a Ponzi scheme.
Yeah, Bernie Madoff.
And now we have this, and then there are, of course, several others which I haven't named now. And and this particular one again is astonishing in its complexity. I mean, it is just a black box, these businesses. Byzantine is a weird word to refer to them. You can't really see what's behind it. I think in this particular case, what happened is that the company had 4 bits to them. There was a venture capital arm, a hedge fund, and 2 exchanges. And the crypto exchange was the most important revenue generator. But then some of these revenues were used in weird and dark ways inside the company. And I think specifically it was a token that the company itself issued, I think called FTT. And that token was basically a sort of cryptocurrency which the company itself invented and then either promised or hoped to buy back from its own profits. Now, so far, this is already getting very complicated and potentially disastrous because if the profits fall away, then obviously you can't actually do that. So there's a clear risk of the token holders, which extends the risk of the actual asset itself they are perceived to hold to direct credit risk on the company, which they didn't think they had. And then apparently what also happened that internally either the hedge fund or the venture capital, I think it was the hedge fund, then used the revenues generated from this to make loans to either itself or to other businesses. And I mean, you can see this is a house of cards which is being built. It's very similar to, not similar, but a house of cards which was similar in its fragility to exactly what Enron did. It's just Enron did it in different ways, building complicated and weird financial instruments which nobody understood how they were structured. And that was basically Enron's downfall in the end. And this particular complex and cloak and dagger world of the way of building a business led to this company's downfall. No, that's sort of the reason why it collapsed. But what I see in the press now is all sorts of speculation of, is cryptocurrency going to be regulated? Or should it be regulated? And I wonder to which extent that is the question which we need to ask, because it wasn't the cryptocurrency or the alleged or perceived dynamics of cryptocurrency which caused this problem. It was just the same thing which always causes problems like this, which is either fraudulent or certainly negligent attempt of building a business in such a way that you do not actually know where the risks are anymore. And that is the sort of thing which needs to be regulated. And I think we all agree to this. But again, I've mentioned this a lot in my commentary now. We've seen these things so often before, CDOs, Enron, AIG. I do wonder whether the regulator is actually able to be proactive in such a way that these types of corporate debacles are going to be prevented in the future. So in terms of my commentary on the discussion which is now emerging in the press and in the financial sector, whether cryptocurrencies ought to be regulated more, well, I don't think cryptocurrencies ought to be or will be able to be regulated, because it's at the point of cryptocurrency that it cannot be regulated. But that is, I think, also not necessarily the danger. The danger is that the physical entities through which cryptocurrencies are being traded and are being manipulated from the real world, they have, of course, to be regulated. And that is not a new insight, but I think every corporate failure of this nature ought to add to a regulator's awareness that perhaps they just need to generate a tighter overall regulatory environment, rather than trying to proactively regulate again on a case-by-case basis, because I think that just can't be done.
Yeah, I mean, it's a growing area. I think that, there's not been enough done on it in terms of regulation. I mean, I wondered whether there'd be even the possibility here that, so I mean, I think ultimately the net result of this is going to be, there is going to be regulation. There has to be regulation to try to protect people from themselves, and to make sure that people don't lose all their money, which is pretty much what they're going to which is going to happen in this case. But it's a question of, do the central banks and the regulators, could they just wait and watch more exchanges and things implode, and then once the sector's pretty dead, then they can come in with their rules and guidance, etc., and build back a cleaner, better industry. So, I mean, I think that's a bit of a risky way of doing it, but yeah, I mean, either way, it needs more regulation. And the irony being that, Binance's chief exec, who is also a bit of a maverick, I guess, he has said that he would welcome more regulation, which is ironic given the fact that fairly recently the FCA refused to say that they would regulate Binance because it just doesn't have the right controls and stuff in place. So there's that point that I wanted to make. The other thing as well is, in much in the same way that you had VW was kind of the face of the Dieselgate scandal, I would say that FTX is the face of the cryptocurrency scandal. And I think if it was up to these kinds of shenanigans, you do think that it's not just them, it probably is the others as well. And so are we going to see a mass collapse of this? And if we do, doesn't that mean that Bitcoin will fall through the floor? Because it hasn't done yet. And and there was something that I saw which I thought was really interesting in the FT this week, which talked about washing, wash trades, which is where in cryptocurrency you'll have all these different crypto wallets. Let's say you're an investor, you have all these crypto wallets. And you essentially buy and sell and trade them, or look like you're trading them to different wallets. But in actual fact, you've still got the same amount in there. It just looks like there's more. And it looks like there's more trades, which means that people will think, well, actually, Bitcoin is okay, and that will calm things down. So, there is a lot of this goes on, apparently. So, it just seems that with the advent of all this kind of collapse, you do wonder what that's going to mean for A, other crypto exchanges, but B, the immediate future of Bitcoin.
Yeah, I think unfortunately it might give cryptocurrencies, not just Bitcoin, I mean cryptocurrencies in general, a bad name. Which I think is undeserved, or if it is deserved, it might be deserved for other reasons. I mean, if we were to criticize and evaluate cryptocurrencies, then I would like to do this on the terms of the cryptocurrencies and not on the terms of maybe a fraudulent exchange through which people were holding them. And I think these are very clearly two distinct things. This was an exchange which went bankrupt, and it went bankrupt for specific reasons that doesn't have anything to do with being in exchange even in the first place. So regulation, yes, absolutely. But this is what dismays me slightly here. It shouldn't actually be anything new here. This should just be regulation, which is already in place in general. It is regulating corporate entities against being overly complicated in its setup, opaque and a black box, and regulating against practices which are basically incestuous. If one bit of the company issues a coin and then tries to buy it back from profits, and then internally another department uses that asset to lend against. That's not good, and that shouldn't happen. But we have regulation in place which ought to actually prevent this. So I wonder whether this is not actually a maybe more uncomfortable discussion which we have to have, which is the regulation which is currently in place effective? Not necessarily do we need new regulation, or do we need regulation to be extended to players which are currently unregulated, but is current regulation fit for purpose? Maybe that's sort of the same, but it's slightly different in focus and in emphasis, this discussion. And I think, again, after Enron, CDOs, and the near endless list of similar sort of debacles, I think we should actually finally start looking at this and increase regulation for this.
Yeah.
Also, we should, I believe, the regulator should be more in tune with the crypto world, and as it develops, with the sort of activities that are going on inside it. You mentioned the wallet kind of trading. This is the ring trading between different wallets, which artificially increase volume. If you think back, I think this is now 20 years ago, there was something which is called a bed and breakfast deal, where a business had an asset and it was valued at historical cost in the reports and accounts. And then basically, if it were to sell this asset, then it would need to pay capital gains tax on it. But of course, you can prevent this if you, on the 31st of December, you would revalue this asset to market value, and this then appears in the as 1st January at market value. Then you sell the asset at the new market value, and you get no CGT on it. So that was a practice known as a bed and breakfast deal, and that was then subsequently made illegal through regulation. And in a similar way, I think the regulator can look at the deals and trading practices which are now emerging and developing in this industry, and clamp down on specific activities within it. Let's face it, it's a new industry. It's something which didn't used to exist 5 years, 10 years ago, certainly 10 years ago. And I think the regulator has to just move with the genesis of this particular new subsector of financial services as well.
Yeah, absolutely. No, fair enough. I mean, it's a very interesting subject. It's going to be going on and on. I mean, I think a couple of amusing observations about this is that the guy that wrote Liar's Poker, he also he also wrote I remember, the one about the CDOs.
Yes.
What's it called?
Yeah, precisely. I also forgot what
that calls. Michael Lewis, right, is his name.
Yes, Michael Lewis, absolutely.
Yeah, and anyway, he seemingly coincidentally has been shadowing Sam Bankman-Fried and the Binance chief exec, whose name I can't remember, but he was with a view to writing a book about the rivalry between the two, and suddenly he's been given this absolute gem, which is probably going to change the ending of the film. But I mean, talk about fortuitous. So I mean, there's that, and the other thing, of course, is, I just think the irony of someone having done what he's done, that his name is Sam Bankman-Fried or Fried.
Isn't that absolutely
so he's frying the bankmen. So yeah, I mean, it's just unbelievable. So this is
Bankman-Fried.
Yeah, I mean, he is a Bankman-Fried. Yeah. So anyway, I just think this story is going to just keep giving.
Entirely.
And it's awful. because people, a lot of investors are going to lose money, and this isn't just rich people sitting around and losing money. These investors have your money, our money, and they've invested that money into this, and they have. I mean, it's like Sequoia. I think they wrote down the value of their investments in FTX to zero. And it was something like $270 million or something like. Anyway, they wrote it down to zero. So this isn't. We can't sit back and go ha ha ha. Although we sort of are. Actually, it is going to affect at least some of us who have indirectly invested into it. So this is serious stuff, and I think he should get. I mean, if everything is true, what is coming out now, he really does need to go to jail for quite some time. So yeah.
Yeah, Michael Lewis is the Big Short was
the Big Short.
name
that's
of
the one.
book.
Yes, which is a great film as well, by the way.
It's a great film, and Michael Lewis is a great author. So to all of you guys out there, I probably shouldn't do this, but I don't get any money from promoting Michael Lewis. Very interesting books. He also wrote a book called Flash Boys, which is on high frequency trading. So he's very knowledgeable about exchanges of any kind. So it doesn't really surprise me that he would have written the book on this particular situation. Just maybe one general comment from me. Yes, this is always completely awful to those who are invested in it. But if you remember, actually there's no but here. This doesn't make it less virulent. There are also tried and tested industries in which these things happen. The Madoff debacle happened in the asset management sector, and people lost everything because Madoff ran a Ponzi scheme, a pyramid scheme. And I think subsequently to that, the regulator was looking at schemes which looked like pyramid schemes a lot more stringently. So I believe some good, in inverted commas, had come out of the Madoff scandal, and hopefully something will come out of this as well. In the end, as I may have said before, we are witnessing the emergence, the building of an entirely new industry on the back of cryptocurrency. And cryptocurrency itself is by no means a clear value proposition at the moment. So this will develop in the next 10, 20 years. And as it does, I think, unfortunately, we were going to see such corporate failures, hopefully not at the same rate now in the future, as the regulators are also sensitizing themselves to the presence of such activities. But in the end, and again, I would say this is not necessarily something to do with cryptocurrency itself. This is the old evil of people building businesses which are deliberately obfuscated in their interrelationships, and then using these relationships, presumably, one might say, with fraudulent intent.
Absolutely. So there we go. I think we'll just leave it there. Another fascinating week. But yeah, who knows what the next week
Who knows what we're going to talk about next week?
No idea. But anyway, maybe it'll calm down. I don't know. What do you reckon? Binance goes bust? How about that? I mean, wouldn't that be? I mean, Michael Lewis might as well just I think that I'm just about done now. He won't ever need to work for the rest of it. Well, he probably doesn't need to work now, but anyway.
He might have had his money in cryptocurrency.
Yeah, well, that's
invested through.
Yes, that is true. That is true. Yeah,
but he probably wouldn't, because writing about it, he will have known more than other people, I think.
Yeah, that's true.
He's a smart guy.
Yeah. Anyway, well, look, thank you very much, as always, Ralph. Always brilliant to talk to you. And
always great being on the show. We're having a bro fest here.
Yeah, it's good. Yeah, we do. Yeah, it's all good though. It's all good. Anyway, right. So, anyway, have a great week, day, whatever everyone is doing, and we'll be back again soon. So, many thanks.
Fantastic. Thanks, guys.
Bye.